I'm joined with Simon Marcotte from Northern Superior Resources. Simon, thanks for sitting down with us.
Always good to see you. How are you?
I'm doing great. So here we are at the Red Cloud Mining Conference. It happens every year in the fall, and I gotta say, we got all-time gold price highs, and just like at Beaver Creek, it feels like there's not a whole lot of euphoria in the air. There's not a lot of excitement in the junior mining space. I know you guys are crushing it out there, consolidating the Chibougamau gold camp. But what's your read right now? Let's start talking some macro. What's your read right now on what's happening with the gold price?
Gold is up another $20 this morning. One day another $20, and gold's moving up. And it's just a matter of time before this whole euphoria catches up the equities, right? I think the last time we were together, you mentioned at Beaver Creek, we discussed the analogy that I see, right, between gold stocks today and the oil stocks in the late 90s. And, for your viewers who did not listen to that conversation, I remember very well in the late 90s, the oil stocks being historically cheap. Look, on an NPV basis, cash flow basis. And the belief back then was oil is not sustainable at 12. Why would I pay for that, for a commodity at 12? And then, as we all know, oil went ballistic after that. And gold is the same thing right now. So the gold is high, but the market is not paying for it because gold is typically a result of the real rates. And the real rates have yet to come down for the gold to go up. When that happens, it will push the equity prices to catch up to the gold price. And even if that doesn't happen, M&A will take it up. Because the producers are printing cash right now, and they also need to replenish their reserves. And the equity market and the gold stocks haven't been this cheap in decades.
Now, I love your oil analogy. I've actually used it myself, but the feedback I get from people is, well, we need oil. Oil helps us run our economy. It helps us have energy for cars. What do we really need gold for? And what's your response to that?
Gold is a financial instrument, right? And I wouldn't try to predict the price of gold based on a supply and demand basis, because it is a financial instrument. The biggest owners are central banks, and if for anything else, any other financial instrument, if the central banks decide that they want to sell gold, they will. But right now, it is a coordinated, unified action that all the central banks are buying, and that obviously they don't buy every quarter, so that brings a bit of volatility. But central banks don't embark into those changes in assets for a month-to-month trade, right? So I would not bet against that demand coming from central banks. And again, I am absolutely convinced that the real rates are going to fall off a cliff. Either the rates are coming down, or the inflation comes back up and the rates are already up and the real estate doesn't support higher rates. So the real rates are coming down, which will push the gold price higher.
You think that we're going to be seeing... Now, it's one thing to talk about the official government statistics when it comes to CPI and however they decide to generate that basket. But I was chatting with Rudy Franck from Seabridge yesterday, who has the famous KSM deposit, and he was suggesting to me that we're probably going to go through a period of major negative real rates, just because that's basically that's the situation that the government's left in now. Whether or not that's statistically the case, and I noticed yesterday I'm on social media and I see we had this 1.6% CPI print in Canada, and all I see on Twitter are people saying 1.6%. That's hilarious. And I hear Rudy say that, and it does start to make sense that the government's going to do whatever they have to do to inflate away this debt and kick the can down the road. And to your point,
yeah,
it looks like that's a scenario.
So listen, if he's right that we're going into a long period of negative real rates, gold stocks are going to go absolutely ballistic, right? If you look at the last two periods that we had negative real rates, COVID, gold stocks were doing pretty well during COVID, right? Very well.
Yeah.
And before that, you had around 2011, 2012, where you had a very brief period of negative rates. And and gold stocks were doing good at that time too, kind of marked the peak of gold stocks and equity stocks in general. But that was coming from a long trend of real rates coming down, right? That lasted from I think early 2000s to early 2011, 2012. So yeah, I mean, if that's what's happening, that we have real rates although to negative territory, then watch out. Like, we're going to be in happy days. Now, as far as the Canadian inflation, I think it's a good point. It's really coming in below the Fed targets, which allows them to cut the rates. And not always, but often, Canada is a smaller economy and tends to be a little bit of a canary in the coal mine to the U.S. economy, kind of a prediction of the U.S. economy. That was certainly true with the credit collapse of 2008. So yeah, it could very well be a presage of inflation cooling off again. Now you're saying 1.6 people don't believe it. I think people react a lot like this because they remember where prices were 3 to 4 years ago, and there's a big difference between price levels and inflation. If you're thinking, and people that are hoping we're going to go back to the prices of 5 years ago, that's never going to happen. I mean, deflation is the biggest enemy out there that we need to avoid at all costs. So no, we're not going to deflate that the economy goes to a stall. Nobody invests if you think it's going to be cheaper next year, right? So no, deflation is a no-no. So stability of prices is what you want. And it certainly looks like we're getting there, especially if you look at the PCE, which is what the Fed's looking at, right?
Yeah. One thing I want to ask you about is somebody who's worked in the Canadian capital markets for the last couple of decades.
Yeah.
I come to an event like this, and great event, but I just don't see as many investors here and enthusiasm. I mean, I really cut my teeth into the capital markets back in the cannabis days, and I remember at this exact location, T-God and Aurora famously had a conference where they had 2,000 retail investors show up to see what were insane presentations at the time, but everybody was buying into the euphoria. And I come here and I'm not seeing a lot of that. Was there a point where you'd come to a conference like this, say back in 2005, and you'd see a lot of investors? What's your analysis of just the foot traffic we see at a conference like this?
Yeah, the foot traffic is not. The retail crowd has yet to jump in, which confirms that you have yet to miss the gold cycle, right? We're not even in the first inning of this cycle. And yes, for sure, it's a good indicator when places like this are packed. But the conversation has changed. The conversations have changed. When you meet with fund managers now, they do allocate capital to the space. You do have investors that you meet that were in Cisco and get acquired and need to redeploy the cash. You do have financings that get done now on a weekly basis in the gold space, and those stocks trade above water, above deal price afterwards. Those are extremely bullish signals, right? So it's just a matter of time before the momentum picks up, and then you're going to see the retail crowd move in and momentum just go on top of everything.
So Simon, I know you follow the macro closely, you follow politics closely. How does the upcoming election in November in the U.S. impact gold, and what do you think is going to happen?
Well, I do have strong political views, and my views are I would be crazy to discuss politics. But I can tell you, I'm happy to go on the record and tell you who's going to win this election. I'm happy to make that prediction. And who's going to win this election is gold. Gold is going to go up no matter who wins. I would say for different reasons, because there's different approach to the current situations. There's no path. There's no way out of this without price of gold going higher here. So happy to go on the record to say that the first year in this new political, after this 4 years political cycle, gold is going to be heck of a lot higher than it is right now.
Okay, so let me sneak in a question here about Northern Superior for our audience. We had you guys on back at Beaver Creek talking about how you guys are consolidating a pretty interesting gold package sort of nearby IAMGOLD in the Chibougamau camp. What's the latest? What should we be watching out for?
Yeah, so just to to remind you of exactly what we're doing. So we're focused on the Chibougamau gold camp, and yes, we've been consolidating the camp because we see that this creates value. But more importantly than that, it is really an emerging camp. Just like in recent years, we have seen the camps of Yukon emerging very well. We've seen the camp of Guyana doing very well. We've seen the camp of Finland emerging very well. And even in the dark days of mining in the last few years, you had stocks that did very well, right? So our view is that when a camp emerges, it's good for all the projects involved in that camp, right? So we have several projects now under the hood in that camp, namely Philibert, the Chevrier, we have the Lac Surprise, we have Croteau a bit further to the north. I would say that each of those projects have the potential to become a standalone project, maybe to the exception of Lac Surprise, which is really the western extension of IAMGOLD's Nelligan. So we have several projects in the area that can become standalone project, that are just on the verge actually of becoming standalone project with the right size and the right grade. But to your point, we've been consolidating the camp because these projects are so close to one another that if it's all under one roof, then we can take an approach, all of these deposits feeding the same mill, which would be the equivalent of having found a ginormous deposit. So that's what we've been advancing, and we kicked off a 20,000 meter drilling program at our Philibert project, so we're quite active. So a lot of news flow should come out. I mean, we have some very nice looking rock stepping out the pit. I've learned one thing though in gold is to wait for the lab results. The visual really can be misleading. And IAMGOLD is quite active in the camp as well now, right? So they're drilling this year at Nelligan, drilling at Monster Lake, they're drilling at Anik as well, which is between us and them. They bought the Lac à l'eau jaune, was the lake with the yellow water project. They bought that recently. They have a new resource coming out on Monster Lake as well. So this camp seems to be the next point of growth for IAMGOLD. Our timing couldn't be better.
Well, Simon, thanks for hopping on here. I think it's going to be a really interesting time for companies like you guys as we enter what feels like I know you don't really see it with the traffic when you're at these gold conferences in terms of the investor base, but it feels like we're kind of in that sweet spot where for companies like you that have been laying the groundwork over the last number of years to put together a great project for this bull market, you guys are in a great spot and a name that we're going to want to keep an eye on. And
it goes quickly, right? And the reason why the junior space moves very quickly when it goes up and you can miss it overnight is because you're looking at pension funds, large funds. When that space starts to act well, they start allocating peanuts for them to the space, yeah. but it massively impacts the valuation of the sector in the TSXV. And another big indicator, Australians are now moving into the gold space in Canada, right? So in the Chibougamau gold camp, Doré Copper just 2 days ago, merging with an Australian company with very strong access to capital. So that's another indication, I think, that it's on. All right, thanks for having me. Really appreciate it. Thank you very much.